Hey traders, Akil Stokes here, Forex trader and trading coach over at tier1trading.com, and welcome to another Trading Edge video. I hope you guys had a great month of June. Yesterday I ended up putting together kind of it was a normal Trading Edge video for our Tier 1 Premium and Trial members, but seeing how it was the end of the month, I also did a brief recap of my statistics. Now, it wasn't the in-depth one that we usually do where I break it down by pair and strategy and whatnot, but I wanted to give them the opportunity to see how the month of June went for me because, well, I really didn't know what to expect. It was a very up and down month for you guys that have been following me on the day-to-day basis. You know that, but it ended up being a very profitable one, which is great because I love sharing stories like that where it's not just me hitting a hot streak, but it's really kind of like a 12-round boxing match where you step into the ring each and every day with the market, you throw a few punches, sometimes you get a few hits in, the market hits you back just as good, but at the end of those 12 rounds, the ref is holding your hand in the air and you come out victorious, and it really makes it feel like you earned your buck. Now, in today's, I should say this, if you didn't have a great June, that's okay. Not all trading months are going to be successful despite the myths, right? A lot of people say you have to win every trade, you have to win or be profitable every day, every week, every month. If not, you are a loser. And that's not true at all. You can ask any professional trader out there. We all go through drawdowns, and drawdowns last different periods of time depending on your time duration, whether you're a swing trader, a day trader, a position trader, whatnot. But what's important at the end of the month, and I know for me personally at the end of each quarter, is that I want to review my trading. If your trading didn't go as you expected this month, you need to ask yourself why, or you need to discover why. And that means going back through your results, going back through your notes, going back through your data, and finding out if, hey, it just wasn't a successful month, if my strategy just didn't work well, if the markets just weren't moving the way I expected, or if you did something to sabotage yourself, right? And there's two types of drawdown. There's a natural drawdown where things just lose, and then there's the self-inflicted drawdown where you do something to hurt your trading. And 9 times out of 10 when we're talking to newer traders, it's the latter. Now, in today's video, I want to share with you a lesson that came up, and maybe this is something that has stopped you from finding success, but it's a lesson on really not having consistency in your approach, paralysis by analysis. And what that means is that you see so much on the chart that you either, well, 9 times out of 10, you do nothing. You just freeze up instead of pulling the trigger. So let's do this. I'm going to show you two opportunities we talked to our traders about this week. One's going to come on the lower time frame, the hourly. The other's going to come on the higher time frame, the daily. And then I'll be right back to follow up with this lesson. Now I'm looking for a secondary opportunity to get involved because, again, we're at that previous level of support that is held. We've put in a nice test of it. And when we go down one more time frame lower to the hourly, right, we've got a pretty cool setup. We have a double bottom down here, not your cleanest looking one, but you have your double bottom down here. We have a break and close above that double bottom, and this is going to set us up for what's called a 2618 trade or a trend continuation trade. They kind of fall into the same general category, but looking for a pullback trade. Let's put it that way. Looking for a pullback in the previous structure and then a chance to get long. So this is something that's going to be on my radar for today. Certainly, it may not happen until next week, but I'll be watching it here on the 60-minute chart. When my live room starts up, we do a lot of day trading in my live room, so I'll go down to the range bar chart as well, and you can see the range bar chart just gives us a much smoother perspective on things, so we may be able to get a different looking opportunity to get long on the range bar charts as well. But we shall see what happens. Just wanted to give you guys the prep work and let you know what I'm looking at, and we'll see if it plays out. But what we're setting up now is also a descending triangle, and here's what I mean. This is one of our simple pattern formations, right? Price action makes a move, swing high to swing low, right? Imagine this being like a floor down here, right? A ball is dropping, right? We drop the ball, It bounces up high on the initial hit from the floor. Gravity brings it back down to hit the floor. We bounce again, not as high, right? So what we're seeing is that the bulls, right, are protecting this level, yes. However, each time they try to push off this level, they're doing so with less and less strength. And we don't know how long this is going to happen, but let's just say the next pullback looks like that. This is going to be called a descending triangle pattern. And this is going to give us a signal for a bearish breakout. So it's, again, very important you adjust your analysis, because if you're so stuck, and I don't know if it's an ego or a pride thing or maybe a lack of experience thing, that's what our traders in the live room said this morning. If you're so stuck on your original concept of double bottom, double bottom, double bottom, and I'm not saying you can't buy it as one, but you need to take it into account when looking for targets, you may miss this opportunity and you may end up on the wrong side of the market. So keep an eye out for this descending triangle for the euro dollar. We would be looking for a breakout to the downside. Now, let's start setting ourselves up in advance. If price is going to break to the downside, then where are we likely to break to, right? And this is a hard one because there's not a clear level of structure. Euro's at this... So briefly taking a look back at the charts, you can see that the 26.18 opportunity that we had did pay off. Just remind you guys, we had a double bottom down here. We actually had two tests of our level, a retest right here. We had a rally up for those taking traditional targets. And then on the second retest up, we actually had that expansion, which came right back to a previous head and shoulders top here in the market. So the 26.18 on the lower time frame, which was the buying opportunity, did pay off. However, if we were to still go back to the daily chart, you can see that did nothing in terms of violating our descending wedge, right? If you guys remember, we're looking at our pole, kind of a flagpole kind of here, and then we had our first high, we had our lower high right here. And currently price action, although we've rallied up, we're still putting in that lower high once again, still giving us that descending trend line on the top. So a good example right here, whether you're looking at this from a longer term perspective or a shorter term perspective, of not letting one type of analysis really change your other type of analysis, or I guess change for the negative. It's okay to adjust it, but not allowing you, not scaring you out of it, I guess is what I'm trying to say. So as you can see, two different opportunities. One was a buying opportunity, so a bullish opportunity. The other was a selling opportunity, so a bearish opportunity. And the question is, which one do I take? And for a trader that suffers from that paralysis analysis, they usually freeze up and do nothing. Then, as they return to the market and see that, hey, the 26.18 opportunity worked perfectly, I was supposed to be in it, but I didn't take it, then they start beating themselves up for missing the trading opportunity. They get emotional about it. They get into kind of that revenge trade mode where they missed out on this opportunity, so they have to take advantage of another one really, really quick. They end up taking something that's not in their plan, and it just starts the snowball effect of bleeding their account dry. And what helps against this, or what will stop this paralysis by analysis, is structure. And I don't mean structure in the market, I mean structure in your trading, right? Good, successful traders treat their trading like a business. This isn't a hobby. We just don't come in and look around and kind of, do anything because of that, right? We treat our trading like a business, meaning we develop a strict trading plan. Within that trading plan are strict rules of engagement of what we need to look for, what we need to watch, and what type of opportunities we should take. And when you have that strict guideline, right, those strict guidelines on how you should be approaching the market, you never get this type of confusion. And I guess you still have to, it is still going to come down to pulling the trigger, right? I've known many traders that do everything correctly, have everything structured the right way, but they still get nervous. They can't get over that hump of actually pushing the order execute button. And that's more of an emotional and trading psychology type of deal. But if you have those strict guidelines, those strict rules on what you need to take, it's very easy to ignore the distractions. So for example, right? If you are a shorter time frame swing trader, right, then you're not taking any trades off the daily, right? So you're only focused on, let's say, that 1 hour time frame. So what's happening on that daily chart, maybe it matters for your overall perspective, but it doesn't matter for actually your trading opportunities, and vice versa. If you're a trader on a daily, you're probably not even going down to the 1 hour chart, because what happens on the lower time frames is really irrelevant. And you can do the same thing for strategy. If you're a 2618 trader, you're only worried about the 2618. If you are a breakout trader, say you trade the descending triangles, you're only worried about the descending triangle. And that way, those two different strategies don't overlap. I work with a lot of new traders, and something I always tell them is keep it simple, right? There's a million ways you can trade out there. There's a million ways to be profitable. Start with one approach. Master that one approach. And that way you don't have to worry about conflicting signals or confusion. And I'll tell you what, even for the trader that does trade both, for the trader that trades breakouts and 2618s, for the trader that trades the daily chart and the hourly chart, for the trader that legitimately has two different signals on two different time frames, right? When you know how to read the market, and we touched on this a little bit in the recording I just showed you, when you learn how to read the market, you can still make that work. And for this example, right, we talked about the descending triangle. If this is going to be a valid descending triangle, we should continue to see lower highs, right? If we're going to see lower highs, right, that next high would probably not come past this certain level. So as you take the 2618 opportunity, you know exactly your range of profitability, meaning you know exactly how far you can place your profit targets in the market before you start getting into that range where you're fighting against the other signal. Like we call that think like the other trader, right? Think about where the other trader is interested in getting involved at and get out before that happens. So if you had a bad month of June, again, very, very, very important that you find out why. And if you feel like one of the reasons you haven't been successful is because you're undereducated, here's what I recommend doing. Matter of fact, here's what I want you to do. And if you're serious about your trading, there's no reason you shouldn't have done this already. Head to our website, www.tier1trading.com. There's a link right below. Click on that 14-day trial membership and get on the program. 15 training lessons, access to 2 live rooms, that's 6 hours of live trading a day, access to daily trading videos from myself and my trading partner, Jason Greystone. We have similar philosophies, but different approaches. So you kind of get to see different views on the market, different tactics, different techniques. He's more of a trend trader. I'm more of a counter trend trader. And it's interesting to see how those ideas complement each other, but also sometimes clash. And of course, you get the chance to involve yourself with a great community of traders, some new just like yourself, some struggling just like yourself, some that have turned their trading around, are successful, and now hold themselves accountable by helping the newer members of the community. So again, in my opinion, if you're serious about trading, you need to do that. Get involved. It's 2 weeks. It's $1. Start getting your trading on track and stop consistently bleeding money. So I'll see you guys next time. I've got to redo my office. I got my new electric standing desk in so I can kind of fix the posture and get rid of the neck and back spasm. So I'll be spending all weekend watching World Cup matches and figuring out how to redo the office. But I'll see you guys Monday for our Q&A session. It's going to be a great discussion on swing trading. Had a lot of questions about that. And I hope you guys have a blessed weekend. Until then, plan your trade, trade your plan. Take care.